This video we're going to look at incomplete records. We're going to look at Examcraft 2019, it's question 7. So you all have this at home, and I'm going to go through it in a different way than I had been doing it in class, just to simplify it a little bit. Okay, so we're going to do steps. So step 1, they don't have to be done in this order. You can do these steps whatever way you want. But step 1, I want you to look at the business that they bought, and I want you to find out, was there a missing figure called goodwill? So what you're going to do is you're going to do a statement of all the assets and liabilities you bought with the new business. So you need what the business owns and owes on a particular date. So if you look at your question, all this information generally in this type of incomplete records is going to be given to you in the introduction. Now there's one thing that I want you to be careful of. If you use your highlighter here, it said you started your business in 2018. Now it's really, really important. I would, if I was doing this for my leaving cert, I would have that circled, because I now know that in my trading profit and loss account I only want the figures for 2018. So you start off in 2018. I want you to highlight that you put 350,000 into a bank account, okay? And on the same day you bought a business for 300. So I want you to highlight that you lodged 350, and I want you to highlight that you purchased a business for 300,000. Now when you purchase this business, they give you a list of all the assets and liabilities of the business. So what I've done here is I wrote down, now the hardest thing that you had to do here was figure out whether it was an asset, something that's good, or a liability, something that's bad that you're going to have to pay for. So I listed down the assets. So I have premises, stock, debtors, light and heat due, you've taken over a debt, so that's a bad, so it's a liability. Creditors, you've taken over creditors, so that's something that you're going to have to pay, so it's a liability. Watch this one. Okay, there's going to be one expense that they're going to give to you in months. So we're going to have to do working on that in a few minutes. Stock of oil, stock of stationery, 3% investments. Now I have a star beside the capital because I'm saying to you, but I shouldn't really say capital there. I should put in maybe the purchase price. But what you've paid for this business is 300,000, okay? And this should all add up, but it doesn't actually add up to two sides, because you must have bought their reputation. Remember, the reputation of a business is very, very valuable, and we call the reputation goodwill. So step 1 is really working out your goodwill. So you're listing all your assets, you list all your liabilities. Now just make sure here you don't put in how much money was put into the business, you put in the purchase price. So I might just write that here for you. Here you're going to put in the purchase price, okay? And then the missing figure is your goodwill. Now, again, when you are doing this for your leaving cert, it's a good idea. We're going to do all the workings, but I would definitely have the trading profit and loss account drawn out. I have the balance sheet drawn out, and as I come across figures, I put them in. Now, if you find that too difficult, do all your workings and then work straight away, but you'd want to speed it up because you only have 45 minutes to do this question. So you would put your goodwill, you could go straight into your balance sheet as an intangible asset. Okay, step 2, we're going to do the bank account. Now again, they don't have to be in this order, but that's the way I'm going to do them. So in the bank account, the first thing is, remember we read the introduction and it said that 350,000 was lodged to the bank account. And the very same day you bought a business for 300. So you spent 300. So then I'm going to go down through the question and figure out, is there anything that goes into my bank account? Now in part 1, it said that the owner issued a cheque each week to pay for household expenses. So out of the bank account, he took money, drawings. Remember, when the owner takes something from the business, this is drawings. This came from adjustment 1. He took €105 every week. There's 52 weeks in the year, so he took 5,460. Then in adjustment number 2, it said that he borrowed 250,000. Now, if I got a loan of 250,000 from a bank, the first thing is it would go into my bank account, and then I'd start spending money. Now, what did he do with that money? He bought a premises for 180. So 250 went in, but on the same day he bought this premises for 180. Now, obviously it's a loan, so I'm going to assume here I might have some loan repayment to make this year, and I'll definitely have interest on my loan. That's why I put the 2 of them in here once I mentioned a loan. I'm going to explain to you where these figures came from in a minute. And then I'm going to just come back to the loan in a minute. I'm going to finish the bank account first. And the rest of this is really based on adjustment number 3. It says during the year he had a small lotto win of 5,000 and received investment interest of 400, and he put both of these into the business bank account. So that's why I have lotto 5,000 there and investment interest 400 there. Okay, because it said that is where he put the money. And then it says, it gives you a list of the payments that he made. So all I've did here is I've written down all of the payments. That's it, okay? And then if you add up your debit and your credit side, and the difference is the balance that's in your bank account. Now again, this balance is something that you own, so it goes into the balance sheet, so you would put it into your current assets. If you had your balance sheet open now, you would straight away go in and put that figure in. I just want to have a look at your loan. Now you've got a loan of 250,000. Be very careful reading this, because there's loads of different ways they're going to give you the loan to do. And said you're going to pay them back in 20 annual instalments. Now annual means per year, so every year you're going to pay back an instalment for the next 20 years. So that means your instalments, 20 into 250,000, you pay 12,500 per year. Now you need to read carefully, when did you start making the repayments? In the question it says the first instalment would become due and payable on the 30th of the 6th, 2019. So the repayments start in 2019. Remember, we're doing the accounts for 2018. So this year there will actually be no repayment of the loan at all. So that's why that's blank. Okay, just to show you what you're going to do in your balance sheet. If I was posting this to my balance sheet, in the balance sheet you have 2 types of creditors. You have creditors that you have to pay back within a year, and you have creditors that you take more than a year to pay them. Now if you look at this loan, this 12,500 will have to be paid within a year. The rest of this loan, you've 19 years to pay it. So I'm going to have to put one loan instalment in less than 1 year to say that will have to be paid in 2019. The rest of this is paid after 2019. Now if you mix these up, it's going to put your net profit wrong. So just make sure you understand why the two of those are split. And that was the key there. That was the trick there in the loan on that question. Okay, step 3, I'm going to have a look at the premises. They'll generally change your fixed assets from the start. So at the start, when you bought this new building, or premises, or business, sorry, your premises cost 235,000. Then you went along and you got another loan to buy another premises. So that's 180,000. So that means you spent 415,000 on your premises, and that's fine. So normally we'd put in premises here in our fixed assets. We'd say premises are 415,000, and now we need to go look and see how much they've lost in depreciation. Now if you look down through your question, there's no mention of depreciation of your premises, but if you look in part 6, the last sentence, it says he estimated that the value of premises at the end of the year, so what they're worth at the end of the year, was 400,000. So how did it go from 415 to 400,000? You would say they lost 15,000 in depreciation. Okay, so that's how you're going to work out your depreciation. So this is the way your premises will look in your balance sheet, and then in your profit and loss you will have depreciation of premises also of 15,000. Okay, the next working or step I'm going to do, I'm going to put step 4 as your investment income. So if you look at the question, at the start, it said when you took over this business or bought this business, you ended up buying or getting 3% investments of 20 grand, which means this business has investments worth 20,000, and they are meant to get 3% back every year. So that means if I look at this, that means this year, 2018, the investment income should be 3% of 20,000, which should be 600. That's how much investment income I should get. So that is the figure that you're going to put in your profit and loss. Just like what we do in question 1. Question 1, step 1, you write down your investments and you put it in your financial assets in the balance sheet. Step 2, you calculate your investment income and put it in your profit and loss account. I might just put these in here like this. And step 3, we work out, is there any of this still due? So you're meant to get 600. Let's look at your cash account and see how much you got. You got 400. So 200 is still due, and that would go into your current assets. Investments, financial assets. That's not fixed there, right? The word financial. So your investments are kept in the very same way that we do in question 1. Step 1, write down the amount that you have in investments. Step 2, calculate your investment income for the year. And step 3, calculate your investment income due. Step 1, 2 and 3. So you have your financial asset, the figure that goes into your profit and loss, and then the amount due in your current assets. Okay, step 5, we're going to look at the equipment. Again, these don't have to be in any particular order, just the way I'm picking them. So in the start, there was no mention of equipment. Here you bought equipment for 25,000. Now, if you look at adjustment 4, now watch this, equipment is normally affected with drawings. In adjustment 4, it says that 25% of equipment was is for the private sector. So I have to take 25% of this equipment out because it's not for the business. So the only part of the equipment that the business owns is this remaining 75%. So equipment is 18,750, and in part 5 it says equipment is to be depreciated by 10%. So this figure again, depreciation we know would go to your profit and loss as an expense, and depreciation of equipment is 1875, and this is how your equipment would look like, how it would look in the balance sheet. Okay, I can't remember what number working I'm on, but you can number them yourselves. I'm going to do light and heat now. Watch the expenses in the incomplete records. Expenses carry a lot of marks. Okay, I'm going to do light and heat. So looking at the start, there was stock of oil 460. Now what you have to say to yourselves, is that going to be used in 2018 or not? If there's oil there at the start of the year, yeah, definitely will be used in 2018. So I'm going to include it. And then if you look here, we have paid another 6,800 for light and heat. Now the next place that you're going to look for your adjustments on light and heat, look at the last adjustment or the second last adjustment. And the second last adjustment, adjustment number 6, it says there was an ESB bill due of 330. So at the end, there's ESB due of 330. Now how do you know whether to add or subtract that? Was that 330 used in 2018 or not? It's due, so obviously you must have used it this year, so you need to include it. And just always check again and make sure that there's no mention of stock of oil at the end. I'm just going to put that, it's not there, but I'm going to put it in just so you know to have it in other questions. So at the end, if there was stock of oil, that means that you had paid for oil during the year, but you didn't use it. The reason on there is 0, but if it was in the question, you would take it away there. So that's all the light and heat that you've used this year. So if you add up all of your light and heat, it's 7,080. Right, the next thing that you need to do with light and heat and with most of your expenses is you need to look at how much the owner took from the business. And again, go back up to part 4, it says, so in part 4, it says 25% was drawings. That means we need to take 25% of that out and put it into drawings, and that's 1770. So that leaves my correct figure that I used this year for light and heat is 5,310 is the figure that you're going to put into your profit and loss. So that's the figure in the profit and loss for light and heat. That's the figure that goes into drawings for light and heat. Anything at the end of the year must either go to an asset or liability. So it's either a current asset or a current liability. You still owe the ESB, so that's not a good thing. So that needs to go to current liabilities or creditors less 1 year. So that's your light and heat working done. The next working that I'm going to look at is I'm going to look at the interest in the loan. Watch the months. There will be months in your loan adjustment. So you took out the loan in July, which means you've had it for 6 months. So you took out 250,000. The rate is 8.5% per year, which means for 1 year the interest will be 21,250. You only have it for half a year, so your interest that you should pay is 10,625. Now, what you need to do from this is there's 2 things that you're going to have to do. You're going to have to figure out how much is the loan interest due, and you're going to have to figure out how much is the drawings on the loan. So what we're going to do is we're going to do the steps what I would do with you in question 1. Okay, so question 1, number 1, you would write down the loan. and the amount of the loan is 250. And we put that into our creditors greater than 1 year. Now we know that we changed that because we said there was installments due. So we changed that to be 237,500. Okay, so we put that into our loan. Step 2, we would always work out our loan interest. Now, I'm going to change these figures in a minute, but just to show you what we would normally do if there was no drawings. We would put in our loan interest and we would say it was 10,625, and we would put that into our profit and loss. Step 3, we would find out how much of the loan is still due. So you're meant to pay 10,625. Let's have a look and see how much interest on the loan you paid. You paid 3,500. So you still owe 7,125, and that would go into creditors less 1 year. So I'm giving the steps the very same as what you would do in question 1. Question 1, you put in the amount of the loan. Now just remember, I had to change the original figure because an instalment is due within a year. Then I'd work out my loan interest without drawings. Now remember, there will be drawings in this, but I'm just keeping the steps the same. And step 3, you'd figure out your loan interest due like what we always do. Now the only part of this that's going to have to change is this part here. That figure is not going to be right, because if we read adjustment 4, it says 20% of what you're meant to pay is drawings. So this figure here is not going to be right, because 10,625 is my interest, but it just said 20% of that is drawings. So I need to take out 20%. Just to get a sheet here, and 20% is 2,125. So my correct figure for this is 8,500 would be the figure that you would put in the profit and loss for your drawings. So again, you keep it the same way that you've always done it. Do step 1, 2 and 3, then go back to step 2 and fix it for the drawings. Okay, so the next thing I'm going to do is I'm going to look at my wages and general expenses. Looking at the start, there's no mention of anything to do with wages and general expenses. Over here, I have paid 23,200, but I want to know how much of that is for 2018. So if, again, you look at the last adjustment number 6, and is there anything on wages and general expenses there? No, there's nothing number 6. So I just skipped something here. Oh, sorry, stock of stationery. Now that would normally go to your stationery, but there is no mention of stationery in this, so we have to presume that that's in our general expenses. So you have stock at the start. You have stock, and the amount of stock is, sorry, no, I can't read my own writing, 250. So you have to ask yourselves, was that stock used in the year 2018 or not? It was there, opening stock at the start of the year. You did use it this year, so you're going to add it in. So that's 23,450 is the amount for your wages and general expenses. Okay, let's have a look at what else we're going to do. We're going to do the next work in here now as well. We're going to do rates. Okay, now with your rates, they were mentioned at the start. And as I said at the start, you've already paid for 4 months. So at the start, it said that you pay for January, February, March and April. And that amount is 550. So it's definitely for this year, you need to include it. Then you came along and you paid in the bank, you paid for another 12 months. And you didn't pay April again. So you must have paid May to following on to April of 2019. Okay, so in your bank, you paid another 3,000. But remember, I don't want 2019. So you paid for 4 months for next year. So at the end, you want to remove January, February, March and April of 2019. So this figure here, this 3,000 here, includes 4 months for next year, which you don't want. So you want to get rid of the 4 months. So 4 months is 1,000. That's for next year, so that's to be taken out. So that will give me 2,550 is the correct figure for rates, or for rent and net rates. Okay, so 2,550. So again, so yeah, this is the figure. that will go into the profit and loss. Now, if you have prepaid your rates at the end of the year, that's a good thing. That also should go into your current assets. The next adjustment is drawings. Like having the skeleton trading profit and loss account open in the balance sheet and posting figures as you come across them, I would definitely have had this working open, and as I came across drawings I would put it in. So the bank figure came from here, part 1. The interest I just did the working on a few minutes ago, like the working on light and heat. This fuel here came from the drawings. Obviously the car owner, or the owner, was filling up his car. Stock came from adjustment 1, and equipment came from the working that I did for you a few minutes ago as well. So your total for drawings is 24,165. Just note in your exam, when you're doing drawings for incomplete records, you should have minimum 5, if not 6 entries. Okay, so there always will be 5 to 6 entries in that adjustment. Right, the next one we're going to look at is debtors, and it's mentioned in adjustment number 5. It says create. Now, just a hint, when it says to create, when you're comparing it with the old one, there is no old bad debt provision because you're creating it, so that should always be 0. So you, first of all, again, just a few things to take note of. You have 2 debtors figures in this question. You have debtors here, which were at the start, and you're going to have a debtors figure given to you in part 6, which is at the end. Now, which figure do you use? It says, decided to make provision for bad debts amounting to 5% of debtors. That has to be the debtors that you hold at the end. So just watch this figure here. It has to be the figure at the end. So you would straight away go to your current assets, put in your debtors, 16,500, and take away the bad debt provision, and you want that to be 5%. So that's very straightforward. And step 2, remember we always compare it to the old one. The old one is 0, so you've just decided to create a bad debt provision. Obviously, because people aren't paying you, that's not a good sign. So that's shown as an expense in the profit and loss. You have an increase in your bad debt provision of 825. The last adjustment I'm going to look at is, it's something that they're starting to throw into the exam, especially in question 6 and 7. They're starting to throw in adjustments that appear in question 1. And that's really probably for students who don't do question 1, and they're avoiding some of the adjustments then. So you're seeing them now appearing in questions 6 and 7. So goods in transit, 3 things have to happen when the goods are in transit. It means that you've bought goods and sometimes you forgot to include them in your books. If you've bought goods and you still haven't paid for them or owe for them, you need to increase your creditors, you need to increase your purchases, and you need to increase your closing stock by the amount of the goods that you bought. Now, looking at this question, the amount of goods that you bought is 4,000. So all you have to do is add on 4,000 to your creditors figure, add on 4,000 to your closing stock figure, and add on 4,000 to your purchases. Now, you might be saying, how am I going to add on 4,000 to my purchases in this question? Because I'm working backwards in my trading profit and loss account. You actually don't really have to worry about your purchases, the 4,000. Once you put it into your creditors and into your closing stock, the 4,000 will automatically appear in your adjusted figure for your purchases. If that makes sense. But you don't have to worry about that because that will appear. Just remember, the creditors, that this will affect your creditors less than 1 year, and your closing stock will affect your trading account, and it also affects your current assets. This, you'll see it when you're doing the question, you're working backwards. I actually might do it for you now in a second just to show you that. I'll pop it up in a minute. So just to show you very quickly why you don't have to worry about this, and just the end of the question, right? So you've worked backwards here and you've ended up with your gross profit. Your closing stock was 35,600, and we said here that you need to add on 4,000 from there, and this was given to you at the start. So that's all you have. I'm going to have to give you information to work out the rest of this. And if you look just before adjustment 1, it says they did not keep a full set of record or books, but estimate that gross profit was 20% of sales. So they're saying that this is 20% of sales, or it's 1/5 of your sales. So if 28,360 is 1/5 of your sales is 141,800. So if I know this figure, I took something away from here to get this figure, so it's easy enough to work out your cost of sales is 113 440, sorry. Okay, so I know 3 of these give me this figure. I think here you have to write it down like algebra to make sure you don't go wrong. So just write down your opening stock plus your purchases minus your closing stock is equal to your cost of sales. So you know this is 12,000. You don't know purchases, so I'll call it X. You're taking away 39,600 and you know your answer is 113,440. So again, it's just moving your figures around. So X is equal to 113,440 minus 12,000 plus 39,600. So your purchases then, sorry, I'll just take a figure here, is 141,040. Now you have to then fill that in, okay? So here, up here you go, your purchases. Now, what is really important here, and they expect this in the exam, they want to see your original purchases before the drawings were taken away. So if you go back to your drawings adjustment, just have a look here and just get it. You said your stock for drawings was 5,760, which means your purchases before the drawings was taken away was 146,800, and they expect that to be shown in the exam.